Hello guys, how you all doing? Well, I'm good myself, and today I got another comment from one of you guys. This one is from Abs Hussein. I hope I pronounced your name correctly. My guy is also very popular on this channel. So his question was about the setting of the placement of our take profit. So he's asking that, just to clarify, we exit the trade at the next opposing structure on the time frame we executed on, like on your execution time frame. So for instance, if my time frame combinations, if like he's giving an example here with H4 and daily, which means he's executing on H4, then he's asking that if I take a buy on H4, I'm going to exit at H4 resistance or H4 bearish trend line if it was not yet broken. So that's the question, which is correct, but I'll show you where you missed it. So that part is correct, exiting at the next opposing structure. You need to know that when you're saying next opposing structure, what do you mean? And you're saying on the time frame that you executed on, that's correct. So daily and H4 and execute trades on H4. So if you're trading daily and H4, then daily is for your trend, H4 is for your execution. That's where you're taking trades. And then the next opposing structure should be on H4. That's where you put your target, and not this one, not on the structure on daily. That's where you got it wrong. Now let me show you, let me explain it in a way that you're never gonna confuse it. We're just gonna use the same H4 and daily. So let's say you're trading daily and H4, right? So it's impossible that it wouldn't make sense, or let me put it this way: there are two concepts that are separate concepts, but they are connected to placement of take profit. Like, it's impossible for you to just go and place a take profit but not consider them. The first one would be you remember the video that I made about risk management, or the risk to reward ratio, where I said you need at least double for you to move your stop loss to break even. And then when you're exiting, you're going to exit at 3 times that, in at least 3:1. You remember that? So that's the first concept that you need to think back to, which is what? The concept of risk management, or risk to reward ratio. The second concept that is linked to how we place your your TP, it's time frame combos, which is also important. What when you're talking about risk to reward, right? I'm talking about let me put it this way. Remember when let's say the price is moving up, let's use a different color so that you understand. If the price is moving up, and then on H4, remember you're talking about H4, and then it gives us a support there, and everything is pointing up, daily is pointing up, and then we're looking to buy, and then it takes off, and then it comes back. Right? Remember, the minimum thing that we need before we can take trades from this is that at least from this from the distance from here to where it turned, or there, if there's a resistance, the distance from here to there, and compared to this one, this must be at least 2 times whatever that we're risking. So if we're going to place our stop loss at 50, the minimum that it has to turn from has to be 100. Why? Because the way we move our stop loss, we need it to move at least 2 times before we can move our stop loss. So now, if for instance, if this thing had turned and the distance is only 60, so it means I won't even have a chance to move my stop loss to break even, but already the price would have hit resistance. So that's why we need at least double, so that when it gets to double, you can decide to close half, you can decide to move to break even. At least you have something to work with. So that's what you do on your time frame that you executed on. So the next opposing structure could be the resistance, or it could be what we call this. It could be the bearish, or the bearish trend line. For instance, if let's say the H4 is moving like this, there's the H4 trend line, and then you hit maybe your daily area of support, and then you get rejection bars there on your H4, and then you execute. The next opposing structure could be your trend line. So the distance from this to the trend line or to the area of resistance. Whichever one you hit first must be at least double this. So that's where you place in the take profit based on the opposing structure on the time frame that you executed on. So that's why you got it right. But I just wanted to clarify that you need to always think of the concept of risk to reward ratio, and then it will help you. If you find that the distance between where you're entering and the next opposing structure is like 1:1, you find that it's 100 this side and it's 100 this side, then you're not going to execute that. You can't say I'm executing and then I'm going to exit at the next opposing structure, because you are risking the amount that you're risking, the amount that you stand to make is equal. So we're just going to ignore that and say we are not going to execute up until the price removes this zone, so that this won't be our next opposing zone. Then we know that the next opposing zone will probably be higher than that. So it means when I'm executing, the next opposing zone will be there. Then I'll have at least 2:1. That's how you trade. Then that's how you check it. You place it based on the time frame that you executed on. And then I said the second concept that you need to think of when you're placing your TP is what? Time frame combo. Remember, in this case, you're talking about daily and H4, right? I'm sure if I explain it like this, you will never miss it ever again. So remember, I say when you're trading daily H4, anything lower than that, from H1 going down, okay, let's say, yeah, it's fine. Let's say lower and higher, right? So here we're talking about weekly and monthly, which is higher than what you're trading, and lower you're taking H1 until wherever, the smallest time frame you can think of. These ones, they don't bother you much. Why? Because they are smaller than what you're trading, and most of the time we will say a higher time frame has a higher chance of winning over the smaller time frame. So that's why you don't take them into much consideration when you're trading. But the higher time frames, it needs to be your thing. You need to be mindful of it. So which means it's impossible that you will trade H4 and not take into consideration what your the daily areas of support or resistance or trend line are saying. So you can't say not. So that's why I'm saying this when you're saying not the next opposing structure on daily. So it's impossible. You can't trade H4 and not take into consideration the structure on daily. For instance, we're still trading our daily in H4, right? With the same scenario that I gave you. Let's say you don't get a reason to enter the price that reverses without giving any reason to enter. Okay, that's fine. It happens sometimes. And then what it does this. It does this, and then it comes back. And then you identify areas of support now because you broke the trend line and all this stuff. And then you say, I'm buying there. And then you find that on daily, you have a daily resistance there. So when I'm buying, you have to check where are the next opposing structures that look like. So because these ones now they are sort of it's here. This is a higher time frame areas of resistance. So you can't trade the daily H4 and ignore that daily areas of resistance, because now it's more like you are fighting daily resistance with H4 support. You see, that's why when you get the exit, let the price decide what it wants to do. If it goes up and breaks it, then it means this does not exist anymore. I can continue on buying with peace, knowing very well that this is no longer there. So to cut the story short, when you are placing your take profit, you check the opposing structures on the time frame that you're trading on. Those will be like your short-term take profit. But the highest take profit that you'll have, or the long term, will be on your highest time frame, on your time frame combinations. In the sense that when you are analyzing, you start with the daily, you'll go on daily and mark the zone above and the zone below. So if you get a trade here if you're trading H4, but this is our daily support, right? And then you go on daily H4, you know that the price is now inside our daily support. And you have the reasons to buy and all this stuff. And then when you're buying from there, the first take profits will be at whatever area of resistance you have on your H4. But the main target or the long-term target will be at the next area of resistance on your higher time frame. Remember, you're trading daily and H4. So the first take profit or the second, whatever, but the last take profit has to be at your highest time frame, highest on your area of resistance or the opposing structure on your highest time frame in your sequence. So those take, if let's say you've got 2 areas of resistance on H4 before you can hit the main resistance on daily, it means if you've got, your account is big enough, you can open 3 trades and then put TP1, TP2, and then final TP here. Because of what, we can't overrule that one. That's the highest time frame we have on a sequence. So once we hit a zone on this, I have to stop trading and maybe look for reasons to sell if it gives me reason to go down. But if it doesn't and it breaks it, then I'll get on the mood of buying again and continue buying. I hope you answered, my guy. But you were not far off the thing. You got it right, but I didn't like the thing when you say not on daily or not on your higher time frame, because you cannot trade and ignore the higher time frame stuff. So if you are buying on H4 and then the price hits daily bearish trend line, it's impossible for you to just keep on holding. Yes, the price can break it, but we just need to be logical about how we place our take profits. So you will never know when the price is going to break the trend line and when it's going to react from it. That's why we don't predict that. When the price gets there, we are out, we are done. We got our 2:1 or 3:1, we're done. We are waiting for it to tell us what it wants to do there. Right? So yeah, I'm going to end it there, and then I'll see you guys in the next one. Sharp.